The third opportunity is what is called BNPL. BNPL refers to buy now, pay later. Now, this is a concept that has become very popular in Australia, in Canada, in the United States, where, for example, a customer goes to an electronics shop. They intend to purchase an item, but they don't have the cash. They don't have credit. So what they would do is that they would purchase the item on a buy now, pay later. They would purchase it now. The buy now, pay later provider would purchase the item, and you would pay the BNPL provider, let's say after 6 weeks or 8 weeks, for example. The BNPL provider generally does not charge any interest. So where do they make money? They make money by purchasing the item at a discount. So, for example, you intend to purchase an electronic item for $100 US. So you would purchase that item for $100. The BNPL provider would have an arrangement with the partner to say that because we are providing the finance, we would purchase that item from you for $90 and on-sell it to the customer for $100. So that $10 difference is the profit to the BNPL provider, whereas you have been financed without any interest, without any profit charge. That is one model. Another model is where service fees are charged for using the BNPL platform. Now, the BNPL industry is worth several billion US, and it is a phenomenon that will overtake the entire world as the millennial generation realize the value of on-demand credit without any additional fees and with a seamless process. So when you look at BNPL, you would have many providers that would be linked up to e-commerce websites. For example, you do your shopping on an e-commerce website here in Kenya, and as you're about to check out, you have a BNPL option that I'd like to purchase this item. If it's $100, I'll purchase it for $100, but I'll pay within 6 weeks' time. So this is the concept of BNPL. Fourthly is with regards to the concept of cryptocurrency, CBDC or central bank digital currency, and blockchain. So I will discuss cryptocurrency in more detail as we go along, but this remains a significant opportunity for the Islamic finance industry. So if we just look at blockchain, the blockchain is essentially a software technology system that essentially validates and verifies transactions over the internet. It could either be one of three forms. It could be based on a private ledger, it could be based on a public ledger, or it could be based on a hybrid ledger. So in other words, you have a DAO, which is a decentralized autonomous group that would essentially verify all the transactions on the blockchain. Now, if you look at a simple thing like trade finance, for example, so there are different legs in a Sharia-compliant trade finance transaction. First, for example, the bank has to purchase the item where the client is made the wakil on behalf of the bank. The client is made the agent on behalf of the bank to purchase a particular item. And thereafter, the bank then offers the item to the customer to purchase. And thereafter, the customer becomes the debtor and the bank becomes the creditor. So there are 5 different legs in a murabaha trade finance transaction. And if any one leg is conducted without the normal process and methodology, then the transaction is not Sharia compliant. So how do we verify that process? So the blockchain can be involved in conducting a trade finance transaction to ensure the validity of the Sharia compliance. Another example is many transactions are based, when it comes to trade finance, are based on perishable goods, for example. And there are certain clauses which validate or invalidate a transaction. For example, if you are exporting a fruit that needs to be at a particular temperature, and let's say, for example, the temperature drops while it is being transported from, let's say, here in Mombasa to Dubai, for example. So it means now that the transaction was invalidated based on a certain condition precedent, based on a certain CP of the purchase and sale agreement that took place between the buyer and the seller. So how is that verified in terms of who is responsible for that? Now imagine if we had a blockchain technology system which immediately, once a temperature drops from a particular point, everyone involved in the transaction receives a notification that based on 1, 2, 3, 4, 5 reasons, the temperature of that shipment had dropped, and that is why on that basis the transaction should be, there should be certain penalties, etc. that are charged. So the issue with blockchain is, and the internet, is that everything on the internet is based on a copy. If you have a document that you need to submit to your bank, right, you are simply submitting a copy of that document. You are not submitting the original file. But with the blockchain, the transactions can be verified in real time as an original explanation and clarification of a particular matter. It is not as though one has to investigate, understand the background of an issue before reaching a conclusion. So this is the concept of blockchain. When it comes to cryptocurrency, we will discuss that in further detail as to the rationale behind the creation and adoption of Islamic cryptocurrencies that perhaps could be backed up by gold or some other resource. The fifth opportunity that presents itself is in terms of personal wealth management, or PWM. What we often find in the Islamic finance industry is that there is a shocking level of service delivery. So there remains a huge gap in terms of service delivery and how we provide the optimum service level to a consumer. I've always maintained that in Islam there are two levels. One is halal and one is tayyib. Halal means something which is permitted to consume. Tayyib means something which is at a higher level, right, of wholesomeness. So we as an Islamic finance industry, we should not only simply aim to be Sharia compliant. Let us aim to be of that tayyib and that wholesome level where we adopt customer perfection and excellence that is beyond our conventional peers also. And inshallah, there will be great amount of barakah, great amount of blessings in our dealings, and also how we can approach the market in terms of showing them the business ethics in terms of Islamic finance, business and economics. How unfortunate it is that in many times we hear complaints of a customer approaching an Islamic bank, an Islamic financial institution. They receive an answer whether they can get finance or not after 2 months, after 3 months, after 4 months. So this is a shocking level of customer service that we have to address. If we want to be the best, if we want to progress and innovate, we have to provide a superior customer experience. And I've always maintained that Islamic finance does not only compete with conventional finance. We have to be better than conventional finance in terms of each and every aspect, whether it comes to the rate that we offer, whether it comes to the superior nature of the product we offer, or whether it is also with regards to the level of customer service that we offer. In business, we are taught that if one does not innovate, then one digresses. So we should adopt the same motto when it comes to Islamic finance. Let us innovate so that we can grow and become better. So when it comes to the personal wealth management space, there remains a huge opportunity in terms of Islamic robo-advisory, Islamic fintech solutions, and Islamic fintech platforms. So there is an example of an Islamic robo-advisory platform called Wahid, based in the US. And they've been regulated in different other markets where they have close to 40 or 50,000 clients on a robo-advisory platform. So if a robo-advisory platform is created where stocks can be screened in real time for Sharia compliance, cryptocurrencies can also be screened for Sharia compliance, that is a huge opportunity for the Islamic finance industry going forward. The next important opportunity is what is termed as Islamic social finance. So some of the opportunities under Islamic social finance include a digital waqf. A digital waqf system. Waqf refers to an Islamic endowment. So waqf basically, in technical terms, means that it is property that has been donated for the cause of Islam itself. It is property that belongs to Allah Himself. Now, this concept of waqf is extremely popular in the Middle East, in areas like North Africa, in Tunisia, in Morocco, and in various other countries in Saudi Arabia, etc. And this could be a fantastic tool in terms of creating a digital waqf where people can donate, and the economic benefit of those donations and those endowments can be used to provide for the poor and the underprivileged. Also, another important point regarding Islamic social finance is in terms of the digitization of zakat. Zakat alone makes up close to 700 billion United States dollars on a yearly basis. And that is only a fraction of what is collected from those who are actually responsible to pay zakat. And I've always maintained that if everyone who had to pay zakat paid their zakat, there would be no poverty on the planet. So we have to provide more awareness in terms of the digitization of Islamic social financial tools, like the concept of waqf, like the concept of zakat, etc. The next important opportunity is in terms of digital sukuk, crowdfunding, and SME finance. The big problem in third world economies and the big problem for Islamic finance is in terms of SME finance, or small to medium enterprise financing. Very often we hear that a startup approaches an Islamic bank and they want funding. The first question that is posed to them is, do you have collateral? If you don't have collateral, you can't get a loan. Now, what is the alternative to that? Do we simply say that Islamic finance doesn't have an answer to any customer that doesn't have collateral? So as I mentioned, we have to innovate in the industry so that we provide value and we create wealth. Islamic finance is all about the creation of wealth and value creation. So when it comes to SME finance, there are a number of solutions that could be used. For example, mudaraba, musharaka, Islamic partnerships. Also the concept of crowdfunding. So crowdfunding, there's three different types of crowdfunding. One is you have equity crowdfunding. The second is debt-based crowdfunding. And the third is rewards-based crowdfunding. So one example of equity crowdfunding is a company called I just lost the name, but it's called Ethos Crowdfunding, based in Malaysia, and they have raised millions of US dollars in terms of funding companies, funding projects on a mudaraba and a musharaka basis. So, for example, let's say there is a property development project here in Kenya, and you need funding of, the project needs funding of $5 million. So they would put up their project online onto a Sharia-compliant crowdfunding platform. Investors can invest into the project. They would receive a return at project maturity. And, for example, the property developer can provide their property, their land, as their equity contribution. So crowdfunding is a huge opportunity in terms of what is called alternative finance. The next is in terms of digital sukuk. So sukuk refers to an Islamic bond or an Islamic securitization structure. For example, the Kenyan government intends to fund infrastructure projects. So they could essentially seek funding from investors through a sukuk, through an Islamic bond, where investors could engage in an istisna, which is an Islamic EPC contract, or BOT, build, operate, transfer contract, where they would contract out to a construction company to build a particular road, and thereafter they will lease it back to the Kenyan state at a fixed rate. For example, let's say 5%, 2%, for example. So sukuk currently has not been democratized. It is only available to institutional investors. When you look at the mix of investors for sukuk, you are normally seeing institutional investors. For example, on a $500 million issuance, you would have 40 investors, 60 investors, 70 investors. But where are the smaller investors that have the opportunity to invest in a retail sukuk? And where are the SME providers that are issuing Islamic bonds for smaller denominations? Then it becomes an issue of cost or democratization of a sukuk vehicle. If you are an SME that needs growth capital of $10 million, You cannot, in the current situation, issue a sukuk and expect to get $10 million. So we need to create a digital sukuk platform. And this is where there remains a huge opportunity for the Islamic finance industry to create a digital sukuk platform where SMEs, startup companies, etc., can launch their companies on this retail sukuk platform. Investors, if you have $100, you can invest into a sukuk as opposed to what we currently have. What we currently have is only sophisticated investors can invest into most sukuks, which basically means that you can only invest at a minimum ticket size of $100,000. And that too, that doesn't even happen. In most sukuks, based on our research, investors invest $5 to $10 million at a piece. So your average retail investor is left out from the sukuk space. The last opportunity that we see is in terms of fintech. Now, fintech is a very, very broad topic. And we will discuss a few elements of fintech as we go along. But under fintech, you have robo-advisory, you have takaful tech or taka tech, which refers to the technology behind insurance. And you have crypto, you have blockchain. So there are various technologies under fintech, and that remains a huge opportunity. When it comes to the challenges for the Islamic finance industry, the greatest challenge that is presented before the Islamic finance industry is in terms of awareness and education. Based on a recent Reuters report of 2019, if you look at Algeria as one example, the awareness level of Islamic finance was only at 9% or 8.9%. Now this is an Islamic country which is almost 100% Muslim, but the awareness level of Islamic finance was only at 9%. So there remains a huge gap in terms of the supply side of products. We have a lot of supply of product, but there remains little in terms of awareness and education. And it is not only simply about an investor knowing that something is Sharia compliant or not. It has to go beyond that. Just the simple production of a certificate to say that a product is Sharia compliant, that is no more enough. As I mentioned, the industry has to move from something being halal to something being tayyib. So halal means you comply with the bare minimum requirements of something being Sharia compliant. And tayyib means we go to a higher level of wholesomeness, of innovation, of growth, etc. The Prophet Muhammad sallallahu alaihi wasallam has mentioned, "Man amila shay'an falyutqinhu." A person who does anything, he should perfect it. And part of perfection is that we innovate so that we can deliver the best solution offered. And alhamdulillah, we as a firm, as Global Islamic Financial Services, and as a Darul Ifta are conducting a number of programs globally around the world in terms of creating awareness and driving education around Islamic finance. And you will notice that you have a Sharia compliant interest-free loan agreement document that has been provided to you. Now this is one of the many templates that we provide to the community free of charge. It is a template to create awareness so people understand that if you are providing a loan, then you should do it on Sharia compliant terms. And you should do it on an interest-free basis. You will see there's another document that has been provided to you in terms of Sharia compliant investments. What screening criteria is used when you make an investment from a Sharia perspective? What are the terms and conditions that back a Sharia compliant investment? So these are some of the documentation and tools that we provide to the Islamic finance industry, but more is required in terms of awareness and education. The second is in terms of banking the unbanked. 60% of the OIC member countries, or 60% of OIC member countries remain unbanked. Now this is a phenomenal number in terms of the unbanked population, or OIC refers to Organization of Islamic Conference. So much more needs to be done in terms of awareness around banking the unbanked. Thirdly is in terms of regulations and centralization. So we have to create standards so that we can regularize and centralize the Islamic finance industry. And I'm not only talking about from a Sharia perspective where you have differing Sharia opinions. I am talking about a more sophisticated and advanced level in terms of taxation, in terms of the legal construct, in terms of mediation, arbitration. We have to create a system that works for the Islamic finance industry. And that will provide more confidence to the Islamic finance industry. And I will give you a simple example. If you look at a sukuk, an Islamic bond entails the purchase and sale of an asset into an SPV. And thereafter it entails a separate lease agreement from the sukuk SPV to the end user client. For various reasons, if taxation is not neutralized in terms of Islamic finance versus conventional finance, a sukuk could end up paying double tax without receiving the proper tax treatment from an Islamic financial perspective. So much more is required in terms of creating neutrality and parity from a taxation perspective in terms of Islamic finance. Secondly is in terms of the legal construct. If the legal codification does not allow for Islamic financial transactions, what happens in the event of a dispute? If there is a dispute, then the matter could be thrown out of court and the law of the land will take over. And we have seen many examples of this. In your own country, in Kenya, there was an example. In South Africa, we had an example where the bank engaged in an Islamic murabaha transaction with the client. And the client simply said, we don't accept the Islamic financial law and we want to work according to the conventional law. So the court threw the contract out. So much more is required in terms of regulations, in terms of centralizations, and creating standards that are in sync with the economic system. Fourthly is in terms of the Islamic capital markets and sukuk industry. So Islamic financial institutions require an efficient capital market system so that it can efficiently operate at the highest level. Let me explain. You have what is termed as a credit mismatch in banking speak. So if you have deposits that have been received on the short term, let's say 100 million deposits, but you have more long-term borrowings. So how do you match between that credit mismatch? You need to find shorter-term liquidity instruments. So what are those shorter-term liquidity instruments? One could use commodity murabaha, one could use interbank wadiya instruments, and there are various other Sharia-compliant capital markets instruments that could be used. Another example is Sharia-compliant hedging. So if a sukuk bond was issued in Kenya, the main issue is that you are borrowing in US dollars, but you are using the funds in Kenyan shillings. Right. So there is a currency issue. There is a currency risk. What happens if the rate fluctuates either higher or lower in terms of the rate that you had borrowed? So that is a currency risk. So we need to create efficient Sharia-compliant hedging instruments like Sharia-compliant swaps, Sharia-compliant derivatives to hedge against that risk. And lastly is in terms of SME finance. I think I've discussed this before in terms of how many small to medium enterprises face a clear lack of solutions in terms of Islamic financial solutions that are provided to them. So much more needs to be done in terms of SME finance from an Islamic financial perspective. So these are in broad opportunities that present themselves before the Islamic finance industry and challenges that face the Islamic finance industry. So time is short. I know I've only completed practically one slide, but in the next session, we will continue with the rest of the topics, which include sukuk, cryptocurrency, and various other topics which I will dissect. So with that, we terminate this first session, and I thank you once again.